Hello, beautiful minds, and welcome back to Boni's Life, the channel where we navigate the electrifying and sometimes terrifying world of crypto with brains, not just bravado. The past week has been a roller coaster, hasn't it? We saw Bitcoin play a nervous game of peekaboo with the $90,000 level, and the market felt more volatile than a cat in a room full of rocking chairs. But fear not. This week, we're not just surviving, we're strategizing. We'll dissect the market's every twitch, peek into the minds of institutional giants, and lay out a game plan for the critical week ahead, which features the one event everyone is holding their breath for: the Federal Reserve's interest rate decision. Will they give the markets the gift they're hoping for? Or will they be the Grinch that steals our Christmas rally? Let's get into it. First, let's rewind and look at the battlefield of the last 7 days. The global crypto market cap is currently hovering around a colossal $3.13 trillion. Bitcoin, our reluctant king, is trading at approximately $89,300. After touching a glorious all-time high of over $126,000 back in October, it's pulled back, making many traders a bit sweaty-palmed. This isn't just a random dip, it's a classic market correction. Our technical charts, particularly on the shorter time frames like the hourly and daily, have been flashing strong sell signals. Think of it as the market taking a much-needed, albeit dramatic, deep breath after a marathon sprint. Now, let's talk about the real drama, the great leverage flush. Over the past week, we witnessed nearly $1 billion in leverage positions being liquidated. For those new to the game, imagine traders borrowing money to make bigger bets. When the price moves against them, the exchange force sells their positions to cover the loan. It's a brutal, cascading effect. It seems some traders got a little too excited with their magic internet money leverage, and the market did what it does best. It enforced a little discipline. While painful, this is actually healthy. It cleanses the system of excessive speculation and builds a more stable foundation for the next move up. The key takeaway here is that the market is showing short-term bearish pressure, but the long-term bullish structure remains very much intact. Alright, let's pivot to the future. The week ahead is packed with events that could send shockwaves through the market. Get your calendars out. On Monday, December 8th, all eyes are on China's trade data. Why should you care? Because China is a global economic powerhouse, and their trade health is a strong indicator of global risk appetite. Strong data could boost investor confidence worldwide, spilling over positively into crypto. But the main event, the Super Bowl of finance this week, is the Federal Reserve's FOMC meeting on December 9th and 10th. The market is overwhelmingly betting, with an 87% probability to be exact, on a 0.25% interest rate cut. In simple terms, a rate cut makes borrowing cheaper, injects more money into the economy, and historically has been incredibly bullish for risk-on assets like our beloved cryptocurrencies. A dovish Fed could be the rocket fuel Bitcoin needs to reclaim the coveted $100,000 mark. We'll also be watching for the US inflation data, the CPI and PPI reports this week, as those numbers heavily influence the Fed's mood. Lower inflation would give them even more reason to be generous with rate cuts. So, what are the big dogs on Wall Street saying? It's a fascinating mix of caution and bold optimism. The recent market dip caused some serious outflows from Bitcoin ETFs, with BlackRock's fund seeing over $2.7 billion withdrawn in 5 weeks. This initially looks scary, but analysts suggest this wasn't a mass panic. Instead, it was largely due to the unwinding of a complex arbitrage strategy called the basis trade. The good news is that cumulative inflows into these ETFs since their launch are still a staggering $57 billion. The institutional appetite is still there. They're just being more strategic. And the price predictions? They're as bold as ever. The analysts at JP Morgan, led by Nikolaos Panigirtsoglou, are holding a price target of $170,000 for Bitcoin, based on it achieving a similar market value to gold. Ben Ritchie at Alpha Node Global is even more bullish, seeing a potential for Bitcoin to top $200,000. These aren't just numbers plucked from thin air. They're based on accelerating institutional adoption and a much friendlier regulatory landscape. Just this past week, the US CFTC announced its approval for federally regulated spot crypto markets, a landmark move that adds a massive layer of legitimacy to our industry. Of course, the crypto universe is bigger than just Bitcoin. Ethereum has been a pillar of strength, reclaiming the crucial $3,000 support level. With buyers stepping back in, analysts are eyeing a potential move towards the 3,400 to 3,500 range in the near term. Some long-term models, based on 5-year RSI trends, even suggest a possible rally to an eye-watering 6,800. Solana, a fan favorite, is currently consolidating around $132. It's approaching a critical resistance level, and its next move will largely depend on Bitcoin leading the charge. However, its underlying growth in the DeFi and NFT space remains incredibly strong. And let's not forget XRP, which has had a rough week, down about 7%. Despite this, long-term predictions remain highly optimistic, with some analysts calling for a price of over $3 in the coming year, especially as they gain more regulatory clarity from their ongoing legal battles. This is the moment you've been waiting for. How do we trade this market? Given the uncertainty leading up to the Fed's announcement, a defensive but opportunistic stance is key. First, risk management is non-negotiable. Reduce your position sizes and use stop losses. This is not the time to be a hero. For Bitcoin, the current battleground is between $88,000 on the low end and $92,000 on the high end. A range trading strategy could be effective here, buying near support and selling near resistance. However, the real opportunity may come after the Fed's announcement. If we get the expected rate cut and Bitcoin breaks decisively above $92,000 with strong volume, that could be your entry signal for a breakout trade, targeting $95,000 and then the psychological milestone of $100,000. For those with a longer-term view, this dip presents a potential accumulation opportunity. A swing trading strategy would involve dollar cost averaging into positions in the $86,000 to $89,000 zone, holding for a target of $100,000 and beyond. And for your altcoin portfolio, consider trimming some of the higher risk plays and consolidating into the blue chips like Ethereum. Holding a portion of your portfolio in stablecoins, say 20 to 30%, will give you the dry powder to seize opportunities when they arise. And that's a wrap for this week's Crypto Market Pulse. We're at a pivotal moment. The market has been shaken, but not broken. The catalysts are aligned for a potentially explosive move, but as always, we must trade with intelligence and discipline. Remember, fortune favors the prepared mind. Don't forget to like, subscribe, and hit that notification bell so you don't miss our deep dives. What are your trades for the week? What are your predictions for the Fed? Drop your thoughts in the comments below. Let's build this community of smart investors together. Stay sharp, stay curious, and I'll see you in the next episode of Boni's Life.